Well, holy smokes, everyone. A crisis worse than 1971 is brewing right now for the US dollar. While many people think that the market volatility is over from all the economic uncertainty with the trade war, a new crisis is brewing underneath the surface. Over the past month, the US dollar has been tanking, but something much worse could happen soon, and many banks and many experts are now warning that the US brand, or the US having the world reserve currency status, could be about to end soon. And if you don't pay attention to this crisis, it is coming. If you don't prepare, all those dollars that you are holding in your bank account, or all those dollars you may have, will be worth much less. Not only that, but we're going to go over the current economic situation that is happening right now. We're going to go over the deteriorating jobs market and also the nightmare scenario for the Fed. So everyone, this is going to be a very important episode, so let's not waste any time. Let's get straight into the news, the facts, and the data. Well, okay, first things first is this. Trade chaos is part of the plan for Trump, and this is a nightmare for Powell. And that's exactly right, because he cannot predict what is going to happen, because what's happening with these tariffs is one day they're on, one day they're off, and all business leaders, all central banks, all major economists, they have no clue what's coming. And that is very bad for the markets because they hate uncertainty. But if we want a very good indicator of how the economy is doing well, let's look at some consumer staples. Let's look at McDonald's and Starbucks, and they confirm eroding sentiment is happening right now. This past week, two lower cost food and beverage retailers, should say high cost food and beverage retailers, but were more known as low cost, posted earnings which conveyed the underlying message that consumers are struggling, which is definitely true. McDonald's and Starbucks reported significant domestic sales declines for the first quarter, and McDonald's saw its US same-store sales fall by 3.6%, driven by a decrease in its guest count. This was the worst decline in the same-store sales since 2020, when they literally shut the whole world down. Starbucks saw its revenues decline by 4% in US stores as well, probably because all their products are very expensive. They're trying to charge restaurant prices and quality and give you absolute garbage. Executives at McDonald's and Starbucks spoke to similar themes. They see their clientele dealing with uncertainty from tariff-related economic concerns, more of a persistent inflation, which is resulting in more frugal behaviors such as eating and making coffee at home. They both note that low-income customers are particularly affected. Well, they are the ones that are always affected the most. Next is this chart. We can see here, United States consumer surveys, uncertainty of Michigan consumer sentiment. And we can see consumer sentiment has fallen below 50, which is recessionary levels. Now, this is a major sign of if a recession is about to hit. Continuing jobless claims continue to drift higher. And the reason why this is so big is because when we did have recessions a couple of years ago, they said, well, no, it's not a recession because unemployment isn't higher. Well, now we are getting the higher unemployment. So jobless claims rose to 1.96 million. That's up massively from 1.84 million last week. And this marks the highest level since November 2021. And accordingly, it signals that an increasing number of job seekers face difficulties finding new employment. And initial jobless claims increased to 241,000. This surpassed estimates of 223,000. Like ADP, the data point to a weaker than expected BLS employment report today. And we have more evidence that more cuts are coming. Berkshire's Geico has cut thousands of jobs in a turnaround effort. The conglomerate commented on tariffs in its first quarter earnings statement released ahead of the meeting on Saturday. Berkshire's operating revenue fell a massive 14% from a year earlier to $9.6 billion, while its cash pile surged to nearly $350 billion as the company struggled to invest. And why do you think they're struggling to invest? Because they think there is going to be a big catalyst with much better buying opportunities coming very soon. In a statement, Berkshire warned that the tariffs could negatively affect its vast portfolio of businesses. Berkshire's results are closely watched because the conglomerate stable of businesses ranging from insurance to rail, energy, and manufacturing provides a snapshot of the health of the US economy. And that's definitely true. They have a very diversified portfolio in businesses that are known to be stable and reliable and safe. So if they're not doing well, the US economy isn't doing well. But okay, what you're here for, a dollar crisis worse than 1971. What exactly is happening? Well, let's get into this next report. Look at this, everyone. Next up for markets, a crisis of confidence in the dollar. And even Deutsche Bank says a risk of the dollar confidence is going to lead to a dollar crisis. Because in times of market panic, investors tend to rush to safety of the dollar. But when stocks swooned in response to US tariffs this week, they ran away from it. And investors say it's a sign that the greenback's global standing may be eroding. The dollar for decades has been a safe haven, but recently it's fell 1.6%, the biggest daily drop since November 2022, after President Trump imposed tariffs on imports at levels not seen since the early 1900s. Stock markets also tanked as tariffs ignited recession worries. Now, I know you may be thinking, well, look, this is all over. This happened, a couple weeks ago. Everything's fine now. Well, people, the fundamentals are saying things are going to get worse. So a lot of people have been pointing the finger at the Trump administration, saying its protectionist policies upending the global economic order in place since World War II, and a growing US debt pile has been chipping away at the dollar's appeal. Left unchecked, a crisis of confidence in the dollar could also undermine its position as a world reserve currency, they said. And this is true. A lot of people are losing confidence in the dollar, and this is the tipping point that could eventually lead to them losing world reserve currency status. There's an underlying basis for this, which is changing role of the US in the world. An erosion of dollar standing as a safe haven is bad news for investors and policymakers, at least in the near term. For investors who have piled trillions of dollars into buoyant US markets in recent decades, a sharp dollar fall could result in high interest rates for longer. That's because price pressures at home could make it harder for the Federal Reserve to cut rates. And that's exactly why it's a nightmare situation for Powell. At the same time, a rapid strengthening of currencies against the dollar is a headache for other central banks navigating a weaker economic outlook, as it makes their exports more expensive and potentially harder for them to revive growth. The euro, for example, just had its best day against the greenback in more than 2 years. And I'll just show this chart here. The dollar slides further on fears tariffs will knock US growth. Another one, the dollar's dive. US currency has seen worst start to the year in over 35 years. So while investors expected tariffs to be inflationary, the consensus was that it would hurt economies abroad more, while leading to high interest rates at home, strengthening the currency. They say that's turned out to be wrong. His tariffs are so sweeping that investors now fear the US will be hurt the most by them as prices rise at home and growth slows. And several investment banks have raised the possibilities they gave of a US recession. So everyone, I know what you're thinking, well, that sounds very, very worrying. So what can we do to protect ourselves? What have I been saying? I say, well, just simply have some gold, diversify into some silver, some Bitcoin, and other commodities. As the dollar falls, all these resources that the world is fighting over for right now are going to boom. And that takes us to our next report. Now, I want to talk to you about a very, very important topic, and that is how the United States is currently making sure that its national security isn't compromised. Because as you know, there's many moving parts, from trade to the dollar, and my focus on materials, the bedrock of our economy. And without them, the US will find it very hard to compete with China. And that's why President Trump has just signed several executive orders ordering to protect copper production and mining on US soil. Just look at this clip.
Next, we have for your attention another executive order. Copper is a critical material, and the supply of copper is vital to our national security. In recent years, we've dealt with a significant issue of the dumping of foreign copper into the American market. That significantly impacted the domestic production and manufacture of copper and copper materials. This executive order charges your Secretary of Commerce with starting the process to potentially impose tariffs or other trade barriers to prevent this ongoing dumping of copper and to protect the American manufacture and production of copper.
It will have a big impact.
Because one, copper is often called the new oil, and is the heart of America's future, and I could not be more bullish about it, especially when it is coupled with gold. And simple economics 101, supply is falling and demand is rising. So on a scale of 1 to 10, I am a full 10 on US production. Because here's where basic common sense supply and demand, like I was saying before, comes into my bullish thesis. Global mine production is expected to peak in 2026 with a projected 700,000 ton deficit in 2025 alone. And underinvestment in new mines has created a big supply crunch. Because like we're talking about earlier, the US-China trade war has disrupted global copper supplies, and China, which controls 50% of global smelting, faces export challenges. That, with Trump's investigation into copper imports aimed at bolstering national security, is a leading edge in a worldwide revolution in mining. So this is all leading to a massive opportunity for copper mining on US soil. And this is precisely what the administration thinks about copper. Lutnick, American industries depend on copper and it should be made in America. No exemptions, no exceptions. Trump said, I've also imposed a 25% tariff on foreign aluminium, copper, lumber, and steel because if we don't have it and we don't have a military, and frankly, we just won't have a country very long. And that is very true. Trump said copper should be made in America and it's time for copper to come home. And the world is all starving for this resource. And that's why I want to talk about today's video sponsor, Giant Mining. That's ticker symbol BFGFF. Because check this out. Not only does it own and operate a copper, silver, gold project in Nevada, but it also recorded its best ever drill intercepts in September 2024. And this company is the only copper company that I'm profiling right now. On February 14th, Executive Order 14213 was issued and implicitly prioritized copper as a critical resource. Nevada, where Giant Mining's copper project is situated, has constantly ranked among the top mining jurisdictions in the world, and this is why I'm bringing this company to your attention. Giant Mining's balance sheet is now fully funded for its drilling programs in 2025, and Giant Mining is well positioned to accelerate its exploration efforts and potentially capitalize on emerging copper market opportunities. And this is big news in my view. Because get this, the share price is down by 50% since February due to market turmoil, so I'm highlighting the company to you for a reason. Giant Mining, again, ticker symbol BFGFF, owns the Majuba Hill copper project, a past producing mine. In the past 4 years, management and the company's geologists have actually expanded the copper deposit, and this past September, Giant Mining hit their best ever drill hole. Historic underground mines at Majuba Hill project produced copper, tin, and silver from the early 1900s to the 1950s, including 2.5 million pounds of copper, 184,000 ounces of silver, 5,800 ounces of gold, and 21,000 pounds of tin. So I'll say this again. All of these factors and the following ones below are the ones that led to my significant bullish opinion about Giant Mining, because the infrastructure is ready. They have access roads, power supply, transportation, water supply, all stockpiles and processing space and a processing plant. So I thought I'd share this very interesting company with you all today, to start doing your due diligence on Giant Mining BFGFF today. But everyone, what do you think about all of this? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.